Don't let this happen to you. This week, I got a call from a client that went through the process to sell their home and purchase a new one and really did not get the guidance and was absolutely misled by the realtor. And I really want to have a conversation about what ended up happening, how we managed to get them pre-approved, but the headaches, the annoyance, the inconveniences that go along with not planning and not actually getting a proper pre-approval or speaking to a mortgage professional. And I want to take an opportunity to go through that this week. So once again, welcome back to the channel. If you have not yet subscribed, we invite you to subscribe, hit that notification bell. Don't forget to leave your thoughts, questions, and concerns in the comment section below. We thank all our viewers, all our clients for leaving our comments, and we appreciate your feedback. This week, I want to take a step in another direction. I want to focus in on a scenario that ended up happening to one of our clients, was misled or was given the wrong information pretty much by the realtor. So what ended up happening was the clients have reached out to me a while back looking to sell their home and purchase a new home. So we had gone through the process of asking the clients to provide their documentation so that we can adequately review all their income, making sure that we're using the right numbers. The person that was on the file was working hourly, so we needed to make sure that his averages work out and that we can figure out exactly what income we can use, because there are discrepancies when you are hourly versus salary. If you're in the construction industry, weather is a big factor. One year to the next can lead to more or less hours being worked. And when you're looking at that income, you need to make sure you're using the right ones. Anyway, with that being said, the clients had basically, went silent. They had all the information, had the link to upload all their documents. I get a phone call this week that the clients had sold their home. And I'm like, all right, perfect. Congratulations. They had sold it for a fixed amount. They had no idea. We had no clue. I mean, ultimately, the part of the pre-approval process, if you're selling a home, is understanding your net proceeds. What is going to be left over after you sell the home, pay the real estate commissions, after you look at your mortgage options? Are you going to stay with that lender? These clients wanted to leave because they were at a much higher rate, or they wanted to break the mortgage because of the fact that they were at a substantially higher rate in comparison to where rates are today. So we went through the whole process and we gave the clients their figures, and they were told by the realtor that they would have no problem qualifying for a mortgage that was much higher than where we had positioned the clients after we had ran the numbers, right? So the clients had sold, they wanted to buy for just over $1 million in the 1.1 range. That's the homes that they were looking at. And they had no idea. They had sold the home because the home had gone on the market. I don't know exactly how the events went down. They said, look, the realtor put the house on the market. They put it on the market for a very discounted price. I do believe that in comparison to the market, that's why the house sold within a couple of hours. I don't know what the scenario is behind this particular situation. If the realtor was just trying to make a sale, and the clients who had trusted the realtor as a family friend ultimately may or may not guided them properly. Now, once again, I don't want to discuss personal factors, addresses, so on and so forth. I just think that ultimately, at the end of the day, the clients sold, they were happy, fine. But at the end of the day, they need to understand is now that they sold the home for that price, we had not run the options to get them into the purchase price where they wanted to be, factoring in the sale of their home, right? So what does all that mean? That means basically going through the pre-approval process, we're going to look at an opinion of value. So you have a realtor, you say, look, I'm selling my home, I'm working with my mortgage broker. How much do you think the home would sell for? Conservatively, optimistically. And, we usually run those numbers on the lower end comparable so that we have a baseline. So just in case the home doesn't sell for the desired price point, you're building in that potential buffer if it does end up selling for more than what the clients anticipated. That just gives them more cash flow, more money towards the mortgage, so on and so forth. With the fact that they were able to net out a decent amount, they did not get them to where they thought, because the realtor had used some calculations. Maybe they had gone on to a online calculator, and although they're pretty decent, we have one ourselves. You can download it in the description box below. You can go through the pre-qualifier. The clients had some debt. The clients had some things that need to be paid out that was potentially not factored in. Once you start to factor in those items, because it's a single income qualifying for this new mortgage, well, you run into some major problems. Now, ultimately, at the end of the day, what we needed to do to try and figure it out, and luckily the clients had some co-signers. They had the mother who was pensioned living with them at home, and they had a son that was living at home as well. And we needed to factor in those two additional incomes. And yes, we can use with traditional banks the income from someone who's pensioned to help support as a co-signer, and ultimately that income helped boost it up, as well as the son. But the son now potentially is going to lose his first-time home buyer's rebate, right? Because now he's purchasing a home with the parents. He's going to be on title. Most banks require you, when you're buying a home, if you're not insured, if it's not one of those high ratio deals, potentially, depending on the lender, you do need to co-sign, right? So that means they're all four people are now going to be on title. The husband, the wife, the mother, and the son are going to be all on the title of this home. In addition to all that, if this wasn't bad enough, poor planning by the realtor, and obviously the clients, I know these clients very well. It is disheartening to hear their situation because they did trust the person, but they failed to speak to us to make sure that these numbers work. If the sale price and the purchase price, all these additional costs would have played out, because we can't keep some of the debts if the income's not sufficient, right? The banks work on a servicing ratio. We do have access to alternate lenders, but ideally we don't want to go into a higher rate, higher premium style of mortgage. So we were able to do that. Now, the other thing the clients were not prepared for was the fact that when you buy a home, you need to have a deposit with offer. Generally speaking, in these particular scenarios, from the consensus is usually 5% of the purchase price. So in this particular case, the clients needed about $55,000 as a deposit with offer. The clients don't have that money, right? Now that the home is sold firm, this poses another set of problems. Where are the clients going to get the money for the next purchase, right? Are they going to reach out to friends and family to see if they can actually gather that money as a sort of a loan in order to pay it back once they sell their home? Are they going to wait till closing, right, to have their home closed, then basically move out, move in with family, maybe do something in the interim to make sure that they can get that money when they close? So remember, when you sell your home, that is when you get the funds released back to you. A lot of times clients will reach out and say, yeah, I sold my home. I'll use the deposit that the buyers had left on that home to purchase my next one. And that is absolutely incorrect. You do not get those funds until the file closes, right? That is super important to understand. So now these clients are saying, well, the realtor told me that we can get a private mortgage to secure the funds that we need for the deposit with offer. And once again, you can pass judgment, you can say whatever you want. The clients were not aware that, once the home is sold firm, not many banks will actually restructure that mortgage, and the additional cost that goes within restructuring the mortgage to go in, pull out the equity because they didn't have a line of credit. So super important. We talked about, securing those options when you're approaching renewal. If you're looking to buy, right? If you're thinking about it, making sure you have a line of credit, because if they would have had a line of credit with their existing lender, they would have had means to access funds in the interim to help them into the next move. But now the clients are faced with the reality to go beg, borrow, and steal this money, 50,000, 55,000, whatever the case may be. Ultimately, as I said, because you're in GTA, the deposit with offer is an indication of your seriousness when you're buying a home. So super important. Now the clients might be facing higher, interest rates, higher fees, higher costs to now remedy this whole situation. And, we're trying to figure that out, but we are able to, with the support of the mom, the son, able to get them through a conventional bank. But now they're faced with finding out how they're going to get this extra money. No one told them, right? The clients hadn't reached out once they sold the home, right? Hadn't even got the documents until after the fact that they sold the home, right? That's when they uploaded the documents saying, hey, our home was sold. Congratulations, But that's not the way it should happen. You need to make sure that you're talking to your mortgage professional ahead of the sale, especially if you're a move-up buyer. You need to make sure that you factored in all your numbers, the sale, the purchase, the range, what you're looking at, what the credit looks like right now, especially for buyers out there that are looking to sell and move up. Maybe it's been 10, 15, 20 years since you had got your mortgage. Maybe you've paid down a lot. Maybe the rules have changed, which they have since you got your mortgage. Your income may have changed since you got that mortgage. And understanding that in today's world with home prices where they are right now, they're still elevated. There's a lot of listings coming to the market, a lot of conversation on rates. We'll talk a little bit more about it. We talked about rates last week. Yes, we have the Bank of Canada coming up with their next rate announcement on March 12th. But ultimately, at the end of the day, you need to have your numbers. Plan. They say hope for the best, plan for the worst. But ultimately, making sure you have all your numbers, all your I's dotting, your T's crossed, will help you avoid these situations, especially if you don't have a co-signer, a son that's working, living at home, willing to forego their first-time home buyers, credit, the land transfer tax discount. These are super important things. Or you're going to pay the price of having to go to an equity lender, providing you fit that model. So save yourself the headaches. Make sure you speak to a mortgage professional before you make a move, especially if you're buying or selling. Let us know in the comment section below your thoughts on this situation. Let us know what you think in the comment sections below. But until next week, thanks again for stopping by, and we'll see you next week.